Hi everyone. So welcome to the live stream today and welcome to a brand new week. We are in the session 9 in our discussion for the March 2024 examination. Really excited about this week because we have great news. Great things are going to be happening this week. We have a lot of things to unpack this week and really excited for joining or having you on the stream today. We are going to focus today's discussion primarily on one of the fundamental issues, and that is cost classification in management accounting. So today's lecture is strictly for management accounting. We are looking at cost classification, but most importantly, we're going to extend the discussion a little bit from the cost classification concept and see how that discussion affects some other topics in the syllabus. So when we go through the cost classification situations or these issues, we are going to extend that to solve practical questions on budgeting. Remember, in management accounting, one of the fundamental topics that will be there for a 15-mark area is budgeting. And so we're going to see how we can use the lessons that we are going to be learning under the cost classification in respect of preparation of the budget for an entity, because management accounting is an interesting area and everything that you learn in the fundamental areas are crucial for you to be able to pass the examination going into the future. So you are welcome. We are focusing on management accounting, cost classification, and budgetary control, a key topic in the exam hall that is going to be there. If you are joining us, make sure that you share the video. Let's reach as many students as possible watching the live stream and getting access as well to the playback. If there are any questions you have, let me hear from you in the comment section or the chat box. I'll be reading your questions and also providing you with some answers in that case. Now, the ICA new syllabus for the March 2020 new syllabus, which is going to be effective in November 2024, has officially been launched, and details about it will be unfolding in the course of the week. But just for you to know, there is no like new subject that is being introduced, so just the current subjects generally available, but the contents of these subjects are what have been modified for the general issue there. But we will get into the details of the syllabus on Friday, God willing, during the live stream. But let's focus and come back to the discussion for the day. Let me bring up my screen quickly and let's get excited into our discussion on cost classification as we get excited for our ninth week, not eighth, ninth week. There we go. Okay, so it's like my slide has to be brought up in a different way. There we go, that's better. So, cost classification. When it comes to management accounting, this is one of the fundamental topics in management accounting, and this topic sets the tone for you to excel in budgeting. It sets the tone for you to excel in short-term decisions. Okay, make or buy, relevant costing decision, all of those issues about shutdown decision, all of the short-term decisions, limiting factor analysis, all of those things, cost classification is going to be setting the tone up for us. Investment appraisal, the principles we're going to be learning here, it's going to also help us to do investment appraisal properly at the end of the day. Then certainly the regular issues about absorption costing and marginal costing. So generally what I want you to understand is this, that this is a topic that is going to cut across the entire syllabus, and my hope is that during this masterclass discussion on this particular topic, we'll be able to apply the principles in the various aspects of the syllabus, and you're going to see how these adds together generally. So what is cost classification? Okay, what is cost classification? What does it mean? In a simple language, or in accordance with SEMA, we say that cost classification refers to the arrangement of items, okay, in logical groups by nature, purpose, or responsibilities. Arrangement of items in logical groups by nature, purpose, or responsibility. So that is cost classification. And so the question we then ask ourselves is, why is this coming up? This is why this is coming up. So let's say that we are a company that is into manufacturing of sanitary parts. Okay, so we manufacture sanitary parts. Then we say that, okay, the cost of production of our sanitary part is whatever the heck. Per pack, it's, let's say, $20. Okay, so our cost is $20 to manufacture the sanitary parts. That's okay. But the question we want to ask ourselves is, what makes up the $20? How did we actually come to that $20? So if we want to determine the cost of a product, a service, or undertaking, how do we get the cost generally? That is where the concept of cost classification comes in. And so my $20 for the sanitary pad can be classified into 4 major groups or categories, which is going to now set the tone for us in respect of our discussion. 4 generally. So we can classify the cost based on the elements of cost. We can classify cost according to the nature of the cost. We can classify cost according to its behavior, how it reacts with the output level. And then we can classify cost according to whether it relates to production or non-production. So on the overall, these are the 4 bases for classification of cost. These are the 4 bases. We're going to take them one after the other and then share our thoughts on them, and then get ourselves into solving a couple of questions on how each of these actually work out. So let's start with the elements of cost. So back to my sanitary pad scenario, that hey, the cost per sanitary pad is $20 per pack. So that is our cost of production of the sanitary pad. What is it made up of? So we start with classification of cost according to the elements of cost. And so there are 3 elements of cost. 3. We have what we call material cost. This is the cost of the ingredients or the inputs used in the production of goods and services. Okay, so it refers to the cost of ingredients or inputs used in the production of goods or rendering of services. That is material cost. Now, when we say ingredients here, we don't mean the ingredients for banku and okra stew or amala and some egusi soup. No, that's not what we mean. Like, we're just saying the input, okay, for the production of goods and services. So my $20 here for the sanitary pad, one of the things there will be the material cost for the sanitary pad. Okay, so what are the things we need for the sanitary pad? Yes, certainly we need some plastics, we need some cottons, we need some chemicals. All of these things will be part of what? The material cost. What actually we are using to produce the goods, or if we are rendering services, to render service in that particular case. Number 2, that is going to be labor cost. For everything that we are doing as an organization, we're going to be incurring labor cost. So what is labor cost? It's simply the cost of human effort used in the production of goods and services, if you want to. So it refers to the cost of human effort, if you want, used in the production of goods and services. Used in the production of goods also and services. Okay, that could be our labor cost. Okay, so if I come back to my material, my sanitary parts, yes, on the material part we need the chemicals, we need the cottons, we need the plastics, and all of those things. Okay, on the labor front, there is a labor component here. We need to pay the factory workers who are going to be working in the factory to manufacture the sanitary part. It's a sanitary part, it's a medical item, so we need to pay some medical doctors right, who are going to be working on the research to ensure that it is chemically balanced well in that particular case at the end of the day. So that is also important. So the people who are going to be working in the factory hand, the medical doctors who are going to be needed, and any other people who are going to be working to ensure that we actually bring that product to the marketplace will be the labor cost. Then the last thing will be expenses. The expenses are all other costs we incur apart from the material and labor cost. Okay? So it represents all the other costs apart from material and labor cost. Apart from material and labor cost. That is the idea about that. So for the expenses part in our scenario here, maybe we have to pay somebody. For instance, let's say we manufacture the sanitary pad in Ghana. If we have to take it to, it depends, probably the whatever Ghana Standard Authority or whatever Food and Drug Authority, whoever regulatory entity we are supposed to take our sanitary pad to, for them to certify to see that okay, it is environmentally friendly. When people use it, they are not going to have any hazardous skin diseases and all that coming in. In other words, the product meets the standard for it to be brought to the marketplace. That kind of cost will be part of what? Expenses. Okay, then we go to the market, we bought we are going to pay for delivery cost. All those things will be expenses. We're going to use electricity, we're going to use machines, depreciation of machines and all that, and other factory overheads that we're going to be incurring could all be part of what? Expenses. These are the three elements of cost, and the first classification of cost that is in accordance or according to the element of cost. So the ingredients that we are using, the input, okay, the people who are involved in ensuring that this product is produced and the product gets to the final consumer, labor cost, and all other costs we are incurring to ensure that the product is completed, it's going to be the expenses. So that is the first element of cost. Then let's go to the second one, and that is classification of cost according to the nature. Classification of cost according to nature. Okay. Classification of cost according to nature. Now, what does this mean largely? Classification of cost according to nature comes from two broad angles. That is where we classify cost as direct costs and then indirect costs. That's it. So stay with me carefully, because now each of these elements of cost, material cost, we will have direct material cost, indirect material cost. Labor, we will have labor cost, indirect labor cost. Expenses, we have direct expenses and then indirect expenses. So it's a build up. Okay, it's a build up. But classification of cost according to nature is where we are classifying the cost according to whether it's a direct cost or indirect cost. So the question we ask ourselves then is, what is the difference between direct cost and indirect cost? The first thing is going to be their definition. Now, so if I do DC, I mean direct cost. If I do IC, it means indirect cost. Okay. So number one, we can say that direct cost can be traced or allocated to a particular cost center or cost unit. We're going to pick the same thing to indirect, but in the case of indirect, we will say that what? It cannot be traced. That's the difference. And we're going to explain that to you in a moment. So indirect cost here cannot be traced to a particular cost center or cost unit. That is the first distinction. What does that mean? It means that for something to qualify as a direct cost, you can charge it to a particular cost center or a cost unit. In other words, you can see it, if it is a product, you can see it in the final product. But for indirect cost, they cannot be traced, they cannot be allocated to a particular cost center or cost unit. So let me drop my sanitary pad example and give you something that everybody will be familiar with, because sometimes people will say, oh, you should have not seen sanitary pad before. We hear you. So let me bring out something that everybody has seen before. Let's talk about a furniture. Okay, a furniture. You've all seen furniture before. You have one in your house, right? So when it comes to furniture, we need the materials for the furniture. Now, what are the materials we need for the furniture? We need a wood, okay? We need some nails, all right? So the wood, the nails, pretty important. We need what else? There is something that is used for smoothing the surface of the wood. I don't know. Is this sandpaper or whatever the heck? Okay, so they nail the wood, the sandpaper. Then there is an oil, some chemicals that are used on the, thing and all that. Just some few things, then we go away. Now, so if these are the materials that we're going to use for the furniture, okay, let's say that we are using some foams, and we are using some actual material or fabrics. Let me put it that way. Some fabrics, which is for the covering of the chair, which is going to cover the foam, and then it will cover the frame of the wood, which becomes the furniture. All right. So all of these are materials. Now the question you ask yourself is, when you see a furniture, which of these materials can you really relate with a furniture? Certainly you will see the wood, you will see the foam, you will see the fabrics on it, because you see the fabric first, then you sit on it, you're like, oh, this is very comfy, this is very comfortable to sit on, right? So you can trace them. But the sandpaper that was used in the smoothing, it's part of the materials we use for the furniture, but you didn't see it really in the final product. Yeah, although you can see it from the smoothing of the wood, but it's not in the final product. The chemicals that was used after the smoothing to ensure that there will not be maybe it would take longer than it's supposed to take, that cannot also directly be seen. So those could be categorized as what? Indirect costs, material cost. That is the idea about the cost classification. So we can trace direct cost to a particular cost center and say that, okay, it is for this cost center, it is for this cost unit. But indirect cost, they are hard to be traced, so they cannot be traced. Yes, we can find their footprints, we can find their spirit, quote unquote, in the product, but they are difficult to be traced. The second thing that we can say then is that because direct costs are traceable, it means direct costs are controllable. Okay? So direct costs are controllable cost. What does that mean? It means that these costs can be influenced by the decision of a manager of the company. Okay? So when we say a cost is controllable, it means that the cost can be influenced by the decision of a manager. Now, it's a significant cost, but on the flip side, we will say that Indirect costs are what? Not controllable. Okay, they are not controllable, or they are uncontrollable costs. So, meaning they cannot be influenced by the decision of a key manager. That's the idea. So, again, let's give an example here. Still on our furniture situation, we can decide what kind of wood we want to use for the furniture. We can decide that we want to use the normal wood like Wawa, Odum, and all that. We can decide to use the industrially pressed wood, because you know there are industrially pressed wood where they take sawdust and other types of things, then they pressed it, go through certain processes, then it becomes a solid wood, and that is the type of wood that is used for various foreign wardrobe and some chairs and all of those things. So we can decide the type of wood we want to use. We can decide what fabric we want to use on the covering of the chair. We can decide what fabric we want to use. It's our decision. So direct costs are what? Controllable. But indirect costs, they are not controllable, because you really can't decide how much you should pay for the chemicals. For instance, when we buy, we are paying for delivery. Delivery cost is an expenses. You can't decide how much you want to pay for that much. Yeah, you can control it in a certain way though, but how much control can you control that generally? Okay, so they are not controllable. They are uncontrollable cost. That is indirect cost. Because of this, number 3, direct costs represent a significant portion of the total cost of the entity. Okay, direct costs represent a significant direct cost represents a significant portion of the total cost, because that is the huge aspect. Whilst the indirect cost, let me put an IC here, indirect cost just represents a small percentage of total cost. That is another difference that we can talk about, because really the cost of the wood, the cost of the fabric, the cost of the form, these are significant costs. Okay, then we come to the carpenter who is going to be working on the wood. So we have the carpenter there, we have the apprentice of the carpenter. Okay, now maybe we can say these will be our labor cost. But of these two, which one is direct, which one is indirect? The amount we pay to the carpenter is a direct cost. What is payable to the apprentice is an indirect cost. Okay, why? Because the apprentice can do a lot of other works, not specifically this furniture that we are dealing with, but a carpenter would have to work on this particular job. The apprentice can be sent to go and buy water, can be sent to go and buy some materials that are that are not enough or that are short, that we need to replenish. The apprentice can be asked to do other things, sweep the place, keep the place neat, or whatever the heck. So what we pay to the apprentice, it's not going to be the same as what we will pay to the boss, the carpenter himself. So the payment to the carpenter is direct labor cost. The payment to the apprentice will be, say, an indirect labor cost in that particular case. Then also, like I said earlier, there are sometimes the furniture will require maybe a special machine. Okay, maybe to make sure it's smoothed out well, or to make sure that the design of the furniture is done well. The cost of hiring that special machine is a significant cost. So that is a direct cost. Are you getting it? But the electricity that the machine will use It's an indirect cost. But the cost of that special machine to add a specific feature to the furniture that we are putting together will have to be a direct cost. Same thing happens. Maybe there is a furniture expert, someone who is supposed to check the quality of the furniture, the stability of the furniture, the comfortability of the furniture. So that special person, the expert, who will come to verify or check the quality of the furniture, the money we pay to that person is a direct expenses. You got to be careful here. Because this is where it becomes a little bit interesting. Because you're like, oh, the expert we are paying, he is working on the job, right? He is working on the furniture. Yes, but he's not a labor. So it is rather an expenses, because that person is not coming to fabricate, construct, use hammer to hit anywhere. No, he is coming to check how the furniture has been. Is it comfy? Is it okay? Does it meet international standards? All that. So the money we pay that expert to check the quality of our furniture will be regarded as also a direct expenses. So you realize that direct expenses will really cover a significant portion of the total cost. But the indirect expenses will usually be small at the end of the day. And that is the distinction that we are talking about. And then finally, number 4, we say that the summation of all direct costs will give us prime cost. So the total of all direct cost gives prime cost. But the total of all indirect cost gives overheads. Okay? So when we add all our direct costs, we get prime cost. When we add all our indirect costs, we get overheads. And these are the things that we must understand when we talk about classification of cost according to nature. So it is on the basis of the last point, that we bring up one of the fundamental issues in management accounting, and that is to prepare a job cost card or a job cost sheet. In other words, we want to prepare a cost card or a cost sheet. So if we are supposed to prepare a cost card or a cost sheet, the question we then have to ask ourselves is, what would be the pro forma? What would it look like? So we're going to work probably, 2 currencies like this. First, we bring our direct costs. So we're going to have direct material coming up. We'll have direct labor following in. We'll bring in the direct expenses coming up. What did we say? We said summation of all direct costs gives us prime cost. So we get a prime cost. Factory overheads. You got to be careful because we're going to work for this later on under absorption costing, activity-based costing. Okay, so the factory overheads bit, I'm going to put an asterisk on that because later on we will deal with that on how we deal with overheads, because the way we deal with overheads will be based on either we are dealing with the absorption costing or the activity-based costing, and we'll come back to that because that is going to influence the way we calculate the cost of the product, and that marginal costing as well, because again that will influence the way we calculate the cost of the product. But factory overheads will be coming in that regard. Once that factory overheads comes in, we get a factory cost, the factory or production cost. Then we're going to add non-production overheads. So this is where, now this is another classification of cost. If you remember, I told you that we can classify costs according to production. This is classifying costs between what relates to the production of the product, so production cost, and then non-production cost. Okay, production cost and non-production cost. So the non-production costs are all the other costs that we are incurring which have nothing to do with the production of the product, like, selling and distribution overheads. Okay, admin overheads. Okay, finance overheads. All these are non-production overheads. So you have to understand, they will not form part of determining the total factory cost of the product, but they're going to form part of the total cost of the product. So we bring the non-production overheads depending on whatever we have there. So maybe let me list some of them here. So selling and distribution, admin, finance, or whatever the heck we got, and then we get a total overheads coming up. You add that to the factory cost, and that gives us the cost of production. Sorry, that will give us the total cost. So if we are supposed to prepare a cost card, then this is where we're going to end getting the total cost. But usually we will be asked to also look at the selling price of the product. And so what do? Since we are at cost, we're going to add profit. And the profit to be added here could either be profit markup or profit margin, depending on whatever the examiner is looking out for. And that is what gives us the quoted price, or if you want, the selling price of the product. The quoted price or the selling price of the product. So this is the pro forma of the cost sheet or the cost card. And this is coming in because of cost classification. And it is one of the issues that the examiner may throw at you in the exam hall for 10 marks. So you can get a question about calculating the cost and the selling price of a product for 10 marks in the exam hall minimum for an introductory question for you to answer. And it is important you understand how to prepare this very well. Now, let me touch briefly on the concept of margin and markup. Let me touch briefly on that. So we can get our profit from two sources, and this is applicable also in your financial reporting or your corporate reporting class, okay? Because profits can be determined using either the markup, so we can have profit markup or profit margin. The way you want to understand this is that markup is on the cost of production. Okay? Or if you want, let me put it this way, not just cost of production, but will be on cost. Margin will be on the selling price. Or if you want the sales. So that's the difference between the two. Markup is on cost, margin is on sales or the selling price. Now, what does that mean in principle? In principle, let's say that, for example, there is a question they said that, KK Limited had a total cost of $10,000 and a profit markup of 10%. So what will be the selling price? So since markup is given, we will say that the selling price will be the 10,000, which is the cost, plus the profit, which is 10% of the 10,000, because it's a markup, and markup is on cost. And so that will be a simple 11,000. So markup is on cost. Very simple. But what if, say, the same scenario, but this time around it's margin? So I'm going to bring the same scenario up, duplicate it below. So KK Limited, so scenario number 1, scenario number 2. So here we will say profit margin. In the second scenario, profit margin of 10%. Stay with me. If it is profit margin of 10%, what does that mean in principle? You have total cost, but you are giving margin. And margin is on sales. But you have cost. So what do? There are 2 ways to present this generally. You can go with a KG2 presentation or the professional presentation or whatever the heck. The idea simply is that, like I just showed you in the pro forma situation, we have the total cost. Okay, we have the total cost. Then we add the profit. All right. And that is what gives us the sales. This is the concept. Now, we've been given the total cost in this question to be 10,000. But we are told that it's a margin of 10%. Margin is on the selling price, but we don't have the selling price. What does that mean? It means that in principle, the total cost represents 90%. The margin is 10%, or profit is 10%, so that the selling price is what? 100%. So if I want my margin, I could just say 10 over 90 times the 10,000. Are you getting the idea? 10 over 90 times the 10,000. And that's like 1,111. So that in that case, my cost will be 11,111. In that case. Alternatively, we could say that, okay, selling price equals cost plus profit. Anything you don't know, what do? You represent it by a variable, isn't it? So the selling price is X, the cost is 10,000, the profit is going to be 0.1x. Okay? 0.1x, because it's a margin. And margin is on selling price. So since you don't know the selling price, it means 0.1x. Okay, so what do? Group like terms. X minus 0.1x equals 10,000. All right? Then you make x the subject. Now, the coefficient of every variable is 1. So that would be 0.9x over 10,000. So x, which is the same as the selling price, will now be 10,000 divided by 0.9. Let's see what we got. And that's giving us the final figure, 11,111. Are you getting the idea? So it means that when you subtract the 11,111 from the 10,000, it gives you the profit of 111,000. So this is an alternative way of moving with the flow. And I'm going and showing you these routes because it depends on the context of the question and which one you are comfortable with. So if we have the total cost, but we are giving profit margin, then you have a right to go with the presentation that you are seeing above there. That's acceptable. That can be done generally in that particular case. Or better still, you can present in this manner and get your figure and bring it back to the cost sheet or the cost card. That is the idea about this one. Now the reverse is true. What does that mean? It means that if I should flip this up, where we are giving the sales but we have the markup, it will be the same flip up scenario if you want to. So let's say that my Love Limited has a sales of 12,300 with a markup of whatever 25%. The requirement is for us to determine the cost of production. So you have markup, but you have sales figure. So immediately you have that inconsistency. Your brain has to be up and ask yourself, what the heck can I do in the context of this question? Like, what really can I do in the context of this question? So what do? Again, we know that the markup is on cost, but we don't have cost. What we have it is a sales figure here. So what do? You can present in that normal manner that we spoke about, that hey, your selling price equals cost plus profit. Now, what did we say? Anything you don't know, we represent it by a variable. The selling price is 12,300. The cost we don't know, so that's going to be X. The profit is going to be 0.25 X. You make X the subject, so it become 12,300, then become 125 X. So you make X the subject and divide by 1.25, then you can get a X, which is the cost. So 12,300 divided by 1.25. And that is going to be 9840. So that will be the cost. So the difference between the 9840, okay, and the 12,300 gives us the profit markup of 25%. That is the idea about that generally. Now, what does that mean in principle? Like, what does that actually mean in principle in relation to putting these thoughts together generally? What it means in principle is that if we are given let's see, if we are given margin, but we have the cost of production, then what do? If you look at what we did here, technically it was deducted. So it's going to be the percentage given the margin divided by 100 minus the margin multiplied by the cost. So let's do that for you to see. If we come back to this scenario here, we're giving margin of 10%, the cost is 10,000. So if we are applying this formula, it's going to be 10 divided by 90 times the cost of 10,000. And that gives us 111, which was the profit we had here, 111. So in a simple language, if I'm giving margin, but I have cost of production, this is the concept for getting my profit figure. But then if I'm giving markup, but I have the sales value, then my profit will be equal to the markup given divided by 100 plus the markup times the sales value. And so this is the professional presentation. Okay, it is a professional presentation. Now someone will say, yeah, I like this one. Yeah, in management accounting, it's not about what you like. It's about how can you present and understand what you're doing well. So if you can remember this, that's okay. But even if you don't remember this, the KG2 formula will never fail you. Selling price is equal to cost plus price plus profit. That's a KG2 formula that will never fail you. so that based on whatever it is you have, you can work yourself out. Because if we come here and punch for the second scenario we just did, we had a sales of this, so the markup is 25. So 25, we add it to, so it become 125 times the selling price was 12,300, and boom, that is giving us 2846, which is going to be actually the profit we will get if we subtract the 9842 we had from this figure. Let's see if we will get that. 12,3 minus 9, 8. So I'm getting 2458. Let me see. Maybe I'm mixing something for this. Let me repunch this. 25, 125, 12,300, 2460. Okay, there's a difference of 2. It's because of approximation for the most part. Okay, because I'm getting 2460. There's a difference of 2 because of the approximation. So the difference is coming in just because of the approximation. So that is the concept about calculating the profit from markup to margin, from margin to markup. If the examiner is direct and says, like I said in the first scenario, that hey, we are giving total cost and markup, the profit is just applied and we go away. Or we are giving sales and margin, you just apply, multiply it, and you get your profit. But if we are in the opposite angles, then we have to try to move from one to the other and use the information we have to be able to solve the question generally. So that is the second issue we must understand: classification of cost according to nature. So there are 3 elements of cost: material, labor, overheads. There are 2 nature into which we can classify cost: direct cost and indirect cost. And based on that, we can then prepare the job cost sheet or the job cost card for an entity or for an undertaking generally. Okay, so let's go to the third one in respect of this, and that is going to be classification of cost according to behavior. Behavior. Now, classification of cost according to behavior is simply where we are classifying the cost according to how the cost vary with the output level. Okay, so it refers to the classification of cost according to how the cost varies with output level, or if you want, activity level. So that's the third thing. Now remember, we've spoken about the fourth one, which is production, already indirectly in the discussion, but that is classification of cost according to behavior. And so from this angle, we can then classify cost into 4 categories. We have fixed cost. Their names will help us a lot. We have variable cost. We have the semi-variable or semi-fixed cost. And then the fourth one will be the step cost. So these are the 4 broad classification of cost that we can talk about. Now let's share some thoughts on them quickly. What is fixed cost? Fixed costs are costs that remains the same irrespective of the output level. So that's fixed cost. the cost that remains the same irrespective of the output level. And so usually at output 0, fixed cost will still be incurred. Okay, even if we have not started production, this is the fixed cost curve. We are still going to be incurring the cost. So examples of this could be rent that we are paying. It's a fixed cost. Okay, rent expenses. It's a fixed cost in that particular case. Sometimes directors' remuneration, if your director's salary, will be a fixed cost because it's a fixed amount of money that they are going to be getting every year on the average is a fixed cost. Okay, so these are costs that remain the same irrespective of the output level for the most part. Then we come to the variable cost. This one, like the name suggests, it varies with the output level. Okay, it varies with the output level. It varies with the output level. In other words, the more you produce, the more you spend. So if we go back to our sanitary pads scenario, the number of sanitary pads we manufacture will determine how much material we have to buy, how much chemicals we need, how much cotton we need, how much plastics we need. Is a variable cost. The more we produce, it is going to then affect how much we are going to be paying in terms of the issue in relation to labor cost. It's a variable cost. It's a variable cost. So usually direct material, direct labor, and sometimes direct expenses can be considered as what? Variable costs. But there's a key concept here that I want you to understand, because this is going to set the tone for a lot of the things in management accounting, and that is variable cost per unit remains the same irrespective of the output level. This is an assumption you don't want to forget. Variable cost per unit remains the same irrespective of the output level. Variable cost per unit remains the same irrespective of the output level. This is a concept that you will apply in short-term decisions. It's a concept you apply in variance analysis. It's a concept you will apply in budgeting. It's a concept you will apply in investment appraisal. It's a concept you will apply in performance measurement, calculation of the transfer pricing. This is a fundamental concept that is going to cut through a lot of things. So don't forget it. Variable cost per unit remains the same irrespective of the output level. Right. Then we come to the third one, and that is the issue about semi-fixed or semi-variable costs. Like the name suggests, these are costs that are partly fixed and partly variable. Like electricity bill. Electricity bill is a semi-fixed, semi-variable cost. Why? Because for each electricity bill you pay, there is a fixed element that you're going to be paying, standard elements that you are going to be paying for the meter and various other things. Then the variable element is going to be based on the consumption, the kilowatts per hour you consume for the period under review. So electricity bill has that two components. It's a semi-fixed, semi-variable cost generally at the end of the day. And one thing you must understand is that semi-fixed and semi-variable costs vary with the output level. They vary with the output level. Very, very important. So semi-fixed, semi-variable. Sales agents. The money we pay to sales agents, semi-fixed, semi-variable. Why? Because there's a fixed component, which is the basic amount we give them every month, and there's a variable component which will be based on how much sales they are able to make. For instance, the people who sell insurance, and people who the microfinance employ a lot, what happens is that there is a base salary that you are going to be getting at the end of the month. It's going to be maybe $1,000 or 1,000 cedis or whatever the heck. But then there's a variable component of their salary that will be commission based on how much insurance they're able to sell, how many customers they're able to bring within the period under review. So that is semi-fixed and semi-variable cost in that regard. Like I said, the cost per unit of semi-fixed, semi-variable. So any item at all that we are seeing cost per unit varying with the output level, it could be a semi-fixed or semi-variable. Be careful. So cost, that's a second concept you have to understand. Cost per unit of semi-fixed cost vary with the output level. In other words, they change. They vary with the output level. Please, it's a principle that we're going to need throughout the discussion. And that principle is different from variable cost per unit. But you're going to need the two to be able to deal with what we are talking about later on at the end of the day. So that is semi-fixed and semi-variable cost. But this is where the big question comes in, that, hey, if we have semi-fixed, semi-variable cost, in other words, we have a cost item that is partly fixed and partly variable, how do we split the cost between the fixed component and the variable component? How do we achieve that? We split cost between the fixed and variable component using one of the fundamental principles, again in management accounting, and that is the high and low method. So anytime we have identified that a certain type of cost is a semi-fixed or a semi-variable cost, which means it has both fixed component and variable component, it means quickly we have to split the cost into the fixed component and the variable component. Why is that important? So that we can get a so that we can get a variable cost and get a fixed cost, so we can now determine the cost of a specific activity or an undertaking. So how do we do this? Simple. With a high and low method, what happens is that we're going to be calculating what we call the variable cost per unit. And the variable cost per unit is simply going to be your maximum total cost minus your minimum total cost divided by the maximum output or activity level minus the minimum output or activity level. Okay, this is the idea here. This is the idea here. And I want you to stay with me carefully because it's going to get interesting in a moment. So maximum total cost minus minimum total cost divided by maximum output minus minimum output. That is how we determine the variable cost per unit. But there are some times when the maximum total cost will not correspond with the maximum output. And the minimum total cost may not correspond with the minimum output. In such cases, what do we do? What we do under such environment is that we are going to be using the activity levels to determine the maximum and minimum. So let me put that down for you. Where the maximum total cost and minimum total cost are not corresponding, if you want, with the respective output levels, the high and low principle is to use the activity levels, the activity, or if you want, output levels to determine the maximum and minimum. This is very important, and we're going to be seeing it applying in a question, and you're going to see what I mean by that. So by default, variable cost per unit, maximum total cost minus minimum total cost, divided by maximum output minus minimum output. But if they are not matching, then we make our decision about maximum and minimum based on the activity level. So we will go to the activity level and pick the maximum activity level minus the minimum activity level. So it means you pick the maximum activity level with its corresponding cost, then you pick the minimum activity level with its corresponding cost. That is how you would then calculate the variable cost per unit. Once we calculate the variable cost per unit, we can now calculate the fixed cost. So if you want, the step 1 would be to calculate the variable cost per unit. Then step 2 is to calculate the fixed cost. Okay, calculate the fixed cost. And you can apply either maximum or minimum. Apply maximum or minimum, at maximum or minimum. At maximum or minimum. These are the ideas about the high and low method, and you're going to see it playing out in a moment. So when we have semi-fixed cost, how do we know something is a semi-fixed cost? When the cost per unit of that item vary with the output levels, then it is going to be seen as a semi-fixed cost, because it will have a fixed component and a variable component. If it is a variable cost, then the cost per unit will remain the same irrespective of the output level. Now, once we have established that the cost is a semi-fixed, semi-variable, it means it has fixed and variable components. How do we split it? We then use the high and low method to do the split. These are the things you must understand about classification of cost. Now, I see some comments coming in. Let's see if I can look at them quickly, then we can see what we will do in respect of the questions that we can look at. So let me bring up my comments slide quickly. Andor William said, good evening, Nhyira. Good evening, Andor. Edward said, great, okay. Then, good evening, Nhyira. Yes, good evening. Abdul Rahim said, hello, hi. Sylvester said, what, prof, with some emoji. I beg you, I'm not a professor yet. I beg you. Good evening, Nhyira. Yes, good evening. That's from Timothy. Please, do you have any idea how we can get access to the syllabus launch? It will be information about how you will get it will be available. It may be available on the ICA website, or you would have to go to the ICA office and get a copy. So information about it will be available when they are done with the full launch. Francis and Musa said, good evening, Shiraya. Good evening. Attila Sky said, I'm watching. Okay. What else do we have? Ben Chapter said, good evening, sir. Yes, good evening. Okay, so I think just these without any specific question on the coverage. Okay. Let's see this one. Let me bring back my slide. All right. So that is the idea about cost classification. Now, the second phase then is, okay, how do we apply this high and low method? Like, so how do we apply the principle? How do we use the principle in solving a question? And we're going to be looking at that in the next session, but I'm going to be wrapping up on the stream today. So we are going to be continuing with this, definitely in the course of. So on Wednesday or on Friday, we're going to be continuing with this and then wrapping up with it. But that is the idea about these fundamental issues that you must understand. When you get these right and understand the concept well, then you can successfully do short-term decisions. You can do investment appraisal and other aspects well, because these principles will help us to walk through these areas very easily at the end of the day. So thanks for watching. Like I said, on Friday, we're going to be giving some ideas about the new syllabus that has been launched, and technically there is no new subject, so it's the same subjects as you currently know about the syllabus. So there is no new subject, unlike the previous revision where new subjects came. It's the same subject, 14 papers as always, 3 levels as always. So it's the same thing. What they are changing a couple of things, like the contents of the subject generally at the end of the day. So in management accounting, there are some arts on. In financial management, there are some arts on. So they are changing the structure of the papers, and then the structure of the exam as well is going to be changing in respect of this. So it's the same papers, but a lot of modification, some add-ons, some expansion to make the syllabus really robust and stand the test of time in the next 5 years. So on Friday, we'll get into the details of the syllabus, so you know what is it that you have to be on the lookout for. But generally, it's the same subjects. It's the same subject, and there's nothing really that you have to be worried about generally, unless otherwise, but we'll get into that on Friday, God willing. So that's it about that. I'll catch you on the next on Wednesday and Friday as we continue. Remember that you can follow our WhatsApp channel. The link is in the description of this video on YouTube, so you can follow our WhatsApp channel. That way you'll be able to get access to the updates and everything that we're going to be posting on what we are doing, the live stream sessions, our revision masterclass, and everything. You can be updated on that, so you can follow and then join us and when it is required. So that's it about that. Thank you for watching. Some of you were doing the sharing of the video and also with a thumbs up. Really appreciate it, and I'll catch you on Wednesday and Friday as we continue with our discussion. Remember, we are in week 9. We are in week 9. So technically, we have like 4 more weeks to go. So in the next 4 weeks, we will be done, and boom, you will be going into the March 2024. So you make sure that if you are going to sit for the exam, you are studying, you are working hard, and you are doing whatever you have to do to make sure you pass the examination. I'll see you on the next live stream as we continue with our discussion. Stay safe and stay blessed.